Before you start stock trading, watch this, or suffer for 10 years. Back in June 2025, in a city on South Korea's west coast, people were shocked by a massive, mysterious insect invasion. Unfamiliar, love bugs blanketed the entire city, swarming into residential areas. It was later discovered that the natural predator of these bugs was the sparrow. Why didn't the sparrows eat them from the start? The reason is simple: they needed time to figure out if it was a safe food source. Initially, one brave or perhaps foolish sparrow tried eating one. When that brave bird survived and thrived, the sparrows around it gradually started following suit. Humans have the same characteristic. We hesitate at first, fearing danger. But once we see our peers doing fine, we start to follow along. You already know what it's called when you observe others first, without directly putting yourself at risk. That's right, it's benchmarking. When people first start stock trading, some invest their pocket money, others put in all their disposable income, and some even bravely invest borrowed funds. Of course, unlike bank deposits or bond investments, stock trading carries the risk of losing your principal. So, we typically benchmark other people first, before deciding whether to jump into stock trading. However, while benchmarking sounds like an active word, in the stock market, unfortunately, the outcome is almost predetermined, often despite our best intentions. Let me explain why right now. Why your stock market benchmarking is already stacked against you. 1. Internal factors. Within our minds, hope takes precedence over despair. Our brains, dedicated to survival, work this way. Our brains prioritize survival over death, and hope over despair. Therefore, our brains instinctively seek out those who got rich from stock trading, rather than those who failed. This is a fundamental habit of our brains. 2. External factors. Humans have an inherent nature for ostentation. We want to hide our failures and always boast about our successes. Some people even exaggerate minor successes to brag about them. Furthermore, numerous studies have shown that humans have an innate tendency to lie from infancy. So, in stock investing, will more people lie about failing? Or about getting rich? Yes, as you probably guessed, the latter is more common. Con artists luring innocent people into investments with fake returns are rampant worldwide. There's another external factor. Brokerage firms don't disclose statistics. The average stock trading returns for the general public are dismal in every country, without exception. I explained the inevitable reasons for this in a previous episode. I'll put the video link below this one. There isn't a single foolish brokerage firm in the world that openly publishes individual investors' stock trading return statistics. Through this benchmarking, influenced by both internal and external factors, you make your next decision. You have two buttons in front of you: a blue button to start stock investing, and a red button to give up on it. After benchmarking your peers, you decide which button to press. The investment environment for individual investors is arguably best in the US. As such, surveys show that the proportion of people pressing the blue button decreases as you move towards less financially developed countries. In the US, it's between 56% and 62%, while in other countries, it's below 50%. If brokerage firms always published the average returns of individual investors, you would benchmark that information and press the blue button very cautiously. However, you're not actively benchmarking. Instead, you're being abnormally induced to benchmark. That's how things unfold in the world. And that's how this abnormal behavior stock trading begins. It's like putting your right shoe on your left foot. And when stock trading becomes a daily, repetitive activity, it gets ingrained in our brains as a natural, normal behavior. So, where did all those people who got rich from stock trading come from? Did they come from Andromeda? In the next episode, we'll explore that question. We'll also look at those who strongly argue that you must invest in stocks.